Join us as we tour the Wyoming Reserve, located in Casper, Wyoming. We will be visiting this cutting-edge precious metals storage operating business, strategically located within an opportunity zone.
Hey Josh.
Jimmy.
How you doing?
Good to meet you.
Good to see you.
Yeah.
This place is great. Tell us where we are right now.
We are inside a precious metals facility. It's involved in manufacturing, secure vaulting, and also distribution. And right now we're in a high security room for the Wyoming Reserve. It's still a little bit under construction in this room right now, but we do have a pretty big vault here that is active and live right now.
And that's where all the gold and silver lies, right behind that big vault door over there. Let's go check it out, huh?
That's right, let's go check it out.
Check it out, all right. Heavy door, but it glides nicely. How heavy is this door?
This is just over 3,500 pounds, just for the door itself.
Okay. And then this is the vault right behind this gate here. So tell me.
And this is a day gate.
Okay.
And yeah, so what is high security vaulting?
Yeah.
That's, a lot of people have that question. You're probably familiar with what self-storage is. A high security vault is for expensive stuff, such as gold and silver. And really it comes down to, instead of square feet, it's cubic inches.
Yeah.
How much gold can we put in a vault like this? This vault can hold multiple billions of dollars. This vault is a class 3, it's a UL rating. It's essentially built out at like an onion, multiple layers upon it. So this vault is now in operation. We just got going, but we've had a lot of planning went into this vault.
Okay, Josh, so this is not a real estate play, right? The investor dollars coming into this investment opportunity, it's not funding real estate, it's not funding development.
The Wyoming Reserve Opportunity Zone Fund is just this vault and what's inside. So we have to abide by the IRS rule of 90% of your tangible physical assets, your property, has to be in the OZ. So as capital comes in from investors, 90+% has to be in physical metal that's stored in this vault.
So it's a vault that's in an opportunity zone. So talk to me a little bit about how is this an opportunity zone investment? What are the business activities happening in here? And how does this all qualify as an OZ investor if I'm coming in with my capital gains dollars? What am I actually investing in?
You're investing in a secure storage company. And so instead of the self-storage, as we talked about, we're insuring third-party metal for other people. So it could be banks, could be sovereign governments, large commercial refineries and other people in the industry, also high net worth clients, people with IRA accounts. It is a mega billion-dollar marketplace. And right now, a lot of that gold is concentrated in New York and London, and they are definitely needing to geographically diversify. So having a vault here in Casper, Wyoming, where it's a population of 60,000, we're far away from a lot of things, in a wonderful state. So we're hoping to attract third-party storage here in this facility, and obviously that's one mechanism of how the reserve makes money. The other way it makes money is by, as those investor dollars come in, it owns more and more physical metal that it's actually making a market in. So it's actually trading that physical material, industrial raw material, for other manufacturers and investors, and just supplying the bullion industry really worldwide right out of this facility.
If you're a gold investor and you're investing in a traditional gold ETF, say GLD or one of the other gold ETFs, you're holding some gold passively, but you're not investing in a business per se, and it's not tax advantaged in the same way that we're physically located in an opportunity zone here. So this qualifies as an OZ investment.
Jimmy,
huge tax advantage, right?
Jimmy, that's right. A lot of people don't realize that precious metals and even the ETFs are actually taxed at a collectible tax rate of 28%. Being part of this, let's exclude the tax advantages. But as a C Corp, the state of Wyoming does not have any corporate sales tax or corporate income tax, and at a federal level, it's 21%. So there's already an advantage that we have over just buying GLD or physical metal. Obviously, I'm in the physical metal space. This is just a heck of a different opportunity. When you tack on the OZ benefits, it gets really interesting.
So it's a play on physical precious metals, but beyond that, you're also investing in an entire economy that supports those precious metals and there's that OZ incentive as well. There's opportunity zone incentives because of where we're physically located.
That's right. So we're physically here. We've got probably, considered a tier 1 asset, gold. It's the only other item on central bank balance sheets outside of the fiat currencies that they are continually inflating. So this is a really interesting business structure. It's really one of a kind, Jimmy.
Excellent. Well, should we head inside, check out what you have inside the vault?
Yeah, let's see what we got going on.
All right. Yeah, this is pretty heavy, Josh. So investors in the fund, they own what's in here. They own some of this silver grain. Is that how it works?
Essentially, they own stock in the operating business that owns this metal. So especially for those investors that do believe that gold and silver have the potential of price appreciation over time, this is the type of asset that the investors would get exposure to through owning the stock in a tax advantage manner.
That's the key part.
That's the key part.
Yeah, it's a little bit different than just owning it physically in your closet or under your mattress, or owning it through an ETF, is that this is tax advantaged way to get some exposure to these precious metals.
Yes, that's right. So Jimmy, this is some temporary shelving that we have while we're waiting on the big stuff to come in. But to give you an idea, this is all gold. This is many millions of dollars. Well, I can't show everything that's in here. Take a quick peek at some of the items that we have here. So right now we're over on the manufacturing side of the facility. This is Scottsdale Mint. This is some of the products that actually haven't even been released to the public market. These are 20-ounce gold bars. Some of these are gold kilos. This represents roughly just over $1 million, which is a lot. You can imagine for those people that have stuff like this at home, it's not insured and it's risky. So finding a vault to store this type of metal is in huge demand. Most vaults are actually in places like New York City. A lot of people, if you remember that when the 9/11 towers went down, there was billions of dollars of gold that were in the basement. So, finding a vault in a secure location that's quiet like Wyoming is becoming quite preferred. So when investors have holdings like this type of gold here, they are going to need a third-party storage vault. And that's where the Wyoming Reserve also makes money, not only on its own metal, but storing third-party metal. So essentially, it charges a small fee to hold this. Most gold is probably held in excess of a decade plus. So think of it more like an annuity-type business. This is storage, secure storage that just lasts for years. And what the Wyoming Reserve does is provide value to those customers and also provide statements. And actually, the Wyoming Reserve is one of the few vaults in the world that actually is third-party, physically audited every quarter, which is quite something else. And so we want to be quite very, very transparent. The Wyoming Reserve's balance sheets are actually, we're marked to market every single day. And we like we mentioned, we're audited, and we're also audited for random weights and purities as well. So Jimmy, let's play some assumptions. Right. Let's say you were a savvy investor and you said, you know what, I'm a little concerned about where the US dollar is going and the financial markets, concerned about inflation, and you happen to buy this gold, let's say 10, maybe 15 years ago. You paid roughly $250,000, and now today it's worth about $1 million.
Pretty good return.
Pretty good return. Well, gold is going to have some tax on it, okay, right? There's capital gains tax on anything that we pretty much sell. So gold actually is more than a traditional capital gains. It's viewed as a collectible tax rate at a federal level, and that actually applies to the ETFs as well. So for example, so you've crushed it, you've done real well, now you want to liquidate it. You have roughly a $750,000 gain off of this gold. Uncle Sam would take roughly this gold kilo bar and these two 20-ounce gold bars, roughly.
What percentage am I getting taxed at?
28. That's 28%.
28%.
Now you can imagine if you were to put that same investment into the Wyoming Reserve, though, and you hold that OZ, it's because the OZ rules. If you hold that investment for 10 years, you're able to sell completely tax-free up till 2047.
Then I get to keep these in my pocket, essentially. Is that right?
In essence, yes. And because this gold is held by a corporation, so you're investing in a corporation that owns these bars, it's much more tax efficient. And in the end, a person or a family is going to be able to hold on to more capital long term. So this is really a very much tax advantaged investment.
Much different than most of the other opportunity zone investment opportunities that investors have to look out there. A lot of them are real estate. This certainly is not real estate. This is far from real estate. This is physical gold here.
Correct, and it's not to say that those other investments are bad. Sure. It's just this really provides a big alternative, and we're probably one of the only ones in this realm that does something like this.
Okay, Josh, we've talked about some opportunity zone benefits. We're inside an opportunity zone. The Wyoming Reserve is set up as a qualified opportunity fund, but on top of that, it's actually some hybrid tax investing strategies. You're also set up as a Section 1202 qualified small business stock operation here, QSBS, which you only need to have a 5-year hold in order to qualify for tax-free gains under a QSBS, but there are some restrictions, some limitations. Can you talk to us about how you've blended those two programs together and what your investors are able to achieve?
That's right. So we are a hybrid between an OZ and a QSBS, the qualified small business stock. So it's actually a stacking benefit for the OZ investor. So an OZ investor is someone that has a capital gain, short-term or long-term. They sold stock, they sold their company, they sold some sort of investment. And when that capital is invested into the OZ, you get the deferment piece, and you also get the tax-free appreciation component after 10 years. Well, because we're a QSBS, that drops from a 10-year hold to a 5-year. So you're able to take the QSBS component plus the deferral component of the OZ, and they stack together. That's just for the first $50 million. After that, per IRS rules, QSBS is no longer relevant. Also in this situation, let's say you're an investor and you don't have a capital gain. You don't have short-term or long-term cap gains, but you've got ordinary income. You've got money sitting in a savings account. If you were to invest in the OZ fund, you're going to get the QSBS benefits, which potentially you come in after a 5-year hold, you're looking at tax-free appreciation forever.
But suffice to say, this hybrid, blended, stacked model, a qualified opportunity fund that blends in qualified small business stock, it's a very tax efficient investment vehicle for investors.
That's right, and I doubt many people have seen a hybrid like this before. So that's something we spent a lot of time with many law firms, big accounting firms, to make sure that we were tight and compliant.
Yeah, not one like this before, and certainly not one that holds physical assets like what's splayed out in front of us right here, right now. Yeah,
that's right.
Of course, an investment in the Wyoming Reserve is different than an investment in gold because it is vaulting, sales, metal availability, and a fulfillment business that holds precious metals as inventory. And the value of the Wyoming Reserve is the value of the business, only a part of which is the value of the inventory. Also, in my example, in order to invest $250,000 in the Wyoming Reserve and receive the tax benefits that I mentioned, you would need to have $250,000 of capital gain to defer by making your investment, and you could defer that gain until 2026. If you go on to hold the investment for 10 years and make the proper election, any appreciation in value is tax-free.